Dubai Eye 103.8.
We've got 4 reports this morning and 4 experts in to discuss them. We are at 22 minutes past 7 on report number 2. It comes out from ValueStrat. It's the VPI index that they put together, the ValueStrat price index. Their report for July, middle of the year, when it comes to residential property. We've been given a sneak peek of it, and in the studio to go through it with us is the ValueStrat Director and Head of Real Estate Research, Haider Tuaima. Haider, good morning. Thanks for joining us.
Morning.
And we don't always dig into your monthly reports because we are very lucky here in this region that there is a huge amount of real estate data that the different real estate agencies put together for us. But I saw yesterday's, and I picked up the phone and phoned you because the first line was quite a showstopper. July saw the highest monthly capital value growth for residential property since 2014. In July.
Yeah, it is a monthly report, and it could be a bit boring just to look at these numbers, and they only increase maybe by small percentages every month. But what made this particular report very special is that 2% month-on-month increase on capital value in Dubai residential market. That has not happened since 2014.
So why has it happened now? Talk me through it.
Right, so the VPI, ValueStrat Price Index, is a valuation-based index. We have a team of valuers doing this day in, day out. They value a fixed basket of properties on a monthly basis. So it's the same properties being looked at. Now, to have a representative basket, we need to have the same number of, let's say, percentage of apartments versus villas. And the majority here is for the apartments. We're looking at 87% apartments versus 13% villas. And what is driving this index up is the apartment sector mostly, and particularly the more affordable areas.
Which is the second sort of grabbing line that comes out of this report, for me anyway. Apartments have seen their highest annual value growth in a decade.
Yes, we've seen a 9% year-on-year annual growth for apartments. That we haven't seen. This is the first time we see that kind of growth here.
The other thing that's interesting about this report is that we are seeing the continuation and maybe even a bit of a tipping point when it comes to what's being focused on. This is a report very much about apartments, and I feel like we've spent the last couple of years discussing the rise in villa values. Is it all about apartments now for you?
No, actually, with villas, it's another story. We're looking at a villa market that has surpassed the 2014 peak. So we're looking at areas like Palm Jumeirah Villas and Palm Jumeirah Emirates Hills. These are the luxury high-end, which I'm sure you've been reporting for a long time on these areas. But now we have Arabian ranches. We have Jumeirah Park. We have Jumeirah Islands also surpassing their peaks of 2014, while as in apartments we're looking at about perhaps 20 to 30% below those peaks. So we have a long way to go for apartments. I'm
talking more about activity though here. You've got sales activity, 84% of it coming from the apartment space. That's what I mean by the shift.
Yeah, in terms of sales, is the question. Right. So again, for DLD numbers, which we'll also look at on a monthly basis, what is happening right now is, again, the affordable areas, particularly the apartments, because we are used to seeing more villa and townhouses demand. But now, for the first time since the pandemic, we've seen a little bit of a move. We're looking at Dubai Sports City, for example, being in the top 5 areas of transacted sales in title deeds for ready properties. We're looking at Dubai Silicon Oasis breaking its monthly record for the number of properties. We're looking at Dubai Land Residential Complex selling the most off-plan properties. So they're breaking their own records. So these areas, we don't usually have them in big headlines because usually we focus on the luxury market.
And that's true. And I'm looking at this, and you're talking about the focus on the affordable areas, as you say, Dubai Sports City becoming one of the top 5 locations for ready home sales. How long can those areas remain the affordable areas with this much attention?
Well, they've been affordable since 2020, and they have seen only marginal growth since, let's say, the beginning of this year. And now, the 6 months of this year, we have seen slight growth. As I mentioned, they are still way below, about 20 to 30% from their peaks. Of course, it depends area on area, location by location. These, particularly the apartments, let's say International City, Discovery Gardens, they also enjoy high yields, so it's good for investors. So the prices are gradually going up, as I mentioned, although it's 9% year on year, but they're still gradual compared to villas. So I think there's still quite a while to go for them.
How do you actually measure what the peak is for these different properties? Because you've obviously, we talk about 2014 there as a peak, we can also talk about 2008, 2009 as a peak. But not all of these residential areas existed in 2008, 2009, or even in 2014. So how do you square what counts as a peak if something wasn't even built in the last one?
Right, so the peak is not necessarily a ceiling that cannot be crossed. I mean, we can have a new peak, and then we will then benchmark that in the future. But we are comparing because Dubai market, the residential market in particular, is a young market comparatively. And yes, many areas did not exist 10 years ago or perhaps even 20 years ago. So we try our best, and that's why we are doing valuations on existing ready properties that existed for more than 10 years and see how the market is moving. But it is possible, very much possible, to go beyond those peaks. Palm Jumeirah is already 30% beyond 2014 peak.
Well, we've got a lot of stock set to come online, on paper at least, over the next couple of years. When we are talking about this 9% rise in existing apartment valuations, what happens when all those shiny new apartments come on the market? What happens to the valuations of existing buildings?
Right, so if we just look at the numbers, we're looking at a major oversupply situation for apartments, particularly in the corridor between the 311 and the 611 highways. But in reality, a lot of those projects are not being handed over on time. There are some project delays. And if we look at the next 3 years, we are looking at maybe 100,000 units coming in online. These are being absorbed, but at a slower rate when compared to villas and townhouses.
Thank you very much for joining us this morning. Haider Tuaima is the Value Strat Director and Head of Real Estate Research. He's the man responsible for the residential property report for July that we have just been looking at. We appreciate your time in the studio this morning.
Thank you.
All right, Tom, who are you speaking to next?
We've got some cousin coming up in a few moments.